VC. So this is the one the short sellers were blowing up on yesterday in pre-market. Pretty insane rip. And this happens fast too. So we had this thing move from 60 cents all the way up to $4. So about a 500% move just in pre-market. Pretty incredible move. And you can imagine top tickers coming in trying to short sell this and getting blown out on this move right here. And then the thing ends up fading back really nice after that. So a lot of shorts struggling with this one. Now, the way I would do it is simply wait for a moving average to confirm. Look at the 50 moving average right here. Comes back under the 50, that's the top. And I don't do top ticking, so I'm never going to be shorting at $4. So I'm pretty happy if I'm in on the backside. I don't care if I'm a little bit late to the party. I only want to be late. And if you're early, don't come because you're going to get blown out. So here are some of these trades because this is exactly the pitfall to shorting on the front side. Let me pull this up really quick. We have a lot of traders trying to hit this. We've got, here we go, top ticker hitting it right there and then stopping out into this move higher. Re-hitting up here, and he does okay on the pullback. Re-attacking the bounce and then covering this fade. Now the fade came back to $1, so he could have made another 50 cents a share on that. He did okay though. There's always a risk of it coming back up. So that's why a lot of these guys are going to be taking these dips when they're there. I see a case for both sides of just waiting. As we know, it came back to $1, so seems like he didn't hang on as long as he could have, but not too bad overall in that one. Sucks to take that initial loss though. This guy took the same kind of loss, didn't re-hit it. So again, trying to top tick right here. I don't know what his signal is to get in. Maybe it just looks good and then you hit it and then stop out into the squeeze. Really rough. This could have been a much worse loss too if he didn't stop out. But this is kind of some top ticking. Maybe there's a trend line right here. I don't know. Look at that closer in a second. Another one right here. Trying to hit these top ticks and cover dips. So that's what he's trying to do, and it's not easy. It's almost like you're picking up pennies in front of a bulldozer or a steamroller, and then he tries again over here. This one gets blown out pretty bad. So pretty interesting move. This is the pitfall of trying to top tick. So there you go. He lost 20K on that one. Anybody else? I think that's about it. So that's the idea. So, and the easy fix for this is simply wait for some kind of moving average. Wait for a moving average cross. Just be patient. And I don't do top ticking, so it's just not how I would trade it. I will always wait for some sort of moving average to cross over. So I like the 50 a lot right here. Even got the breakdown, pull back to the 50 right there. So that is pretty clean. Might still have to use sort of a wide-ish stop though, because this can bounce more than you think and still work no problem. And what a beautiful fade on that. All the way back to $1. It's a pretty incredible move on that one. me pull up the other one from yesterday because this is just another really nice example. FRGT. So pretty clean fade. It threatened to squeeze here out of the gate, but dropped off pretty hard into the after hours right before the close. So if you got patience and you can wait all day like that, that's maybe a good place to try to get out. Possible 30% move into the after hours. Pretty light volume over there though, so tougher to hit that with size and weight for that kind of a dump. But that's where maybe small counts will have an advantage because you would be able to get out no problem over there and still make 30%. So if you have a small account, it doesn't matter if you're making 30% on a super liquid stock or maybe a less liquid stock that's still pushing decent volume. You got 10 million bucks trading right here over 10 minutes. That's pretty good. You got decent volume right here also, another 10 million bucks right there trading. So the liquidity is not terrible on this. The liquidity on the exit is a lot lower, but let's say you're trading a $5,000 or $10,000 position on a small account. That is a super clean gain, super nice, and it's not going to be competing with all the top dogs that are going after the hyper liquid trades and maybe overcrowding a lot of those other stocks. So again, this one's only up. It's up 100% right here in the pre-market. Comes down, and then after it crosses that 50 right here, could pretty much get in anywhere on the backside, and then just be patient and wait. Never even came over VWAP, so a lot of people do like to risk VWAP. A very common thing to do. So that's kind of what I'm looking at here with some of these trades. We've got the super crazy ones like VC, and then the FRGT, which is less attractive to most of the traders. So they tend to just come down easier too and be less crowded, lower fees, just easier fades on some of these weaker gappers. But still a decent gapper overall. And then the liquidity is what kind of chases a lot of people away from these. But again, with a smaller account, it doesn't really matter if you make 30% on something that trades $200 million on the day, or if you make 30% that trades $1 billion on the day. Makes zero difference. So that's why something like BYND, where we had that really crazy move, trading $1 billion on the day back here. So yeah, it traded 2 billion shares on the day. Pretty incredible move. If you have a massive account, you're able to take as big of a position as you want. You can take multi-million-dollar positions on a BYND type move, whereas on an FRGT, you can take a much smaller position but still make 20 or 30%. BYND, 50% potential on that trade. But again, do 50% on as much size as you want, or you can do 50% on small account. It makes no difference, really. The point is, those opportunities that exist can be taken advantage of. You can get a lot more of them on the small accounts than on the big accounts. The big accounts have to wait for these kind of absurd moves to happen that are trading billions of dollars. And a lot of these guys that have big accounts, they want to take multi-million-dollar positions because they want to make a few $1,000,000 on the trade. So you just cannot do that on some of these less liquid stocks. So they're not even going to try to trade and FRGT. It is just totally off radar, irrelevant for them because they can't get the size in that they want. So their time is kind of better spent just waiting for better opportunities or more liquid opportunities. It's not even that it's better, it's just more liquid. And then the smaller accounts need to capitalize on these lower liquidity trades too to build up that account. And really the end game is when you have a multi-million-dollar account like that, taking multi-million-dollar positions, your goal is to wait for those better opportunities that are more liquid. So we'll see what happens here with CMMB. And again, it's kind of a matter of if you top ticket, you get squeezed. If you wait for the backside, maybe the 50, then your odds are better of being on the backside. It's never always confirmed. You never know for sure. But for me, I do better if I don't try to top tick. Because again, on this one, I would have thought, what would stop me from thinking this is the top or this is the top? And then it just keeps going up and up and up. So at least waiting for that 50 or some kind of moving average, maybe a crossover, depends on what you want to do with it. So we don't want to top tick. We want to take the backside using any indicator. It doesn't really matter what you use. You could use MACD. You could use a 5-minute time frame. Anything other than top ticking is what I'm going to try to do. Some people do well with it, but it does open the door for some of those really, really crazy squeezes like VC that will get totally out of control and start running pretty massively in just a few seconds. And it's tough to manage risk when that happens.